Hi folks, Scott here, and this is the wrap for Thursday, June 20th. So an ugly day in the markets. The markets are still live here. We've got about 45 minutes in the futures session, 30 minutes in the cash session. So we could get a bounce here, but I don't think we're going to get gap filled today. In fact, I'm positive we will not get gap filled today unless something extraordinary happened, and even then I doubt it. Now what I want to show you the results for this back test, particular back test here going into tomorrow, is after such a weak day coupled by a weak day that preceded it, how has the market performed historically? Specifically, how has fading the gap at the open using an end of the day stop, targeting gap fill after 2 days of heavy selling. 2 days of heavy selling I've defined as closing down by at least 2%. We're actually at about 3% right now. But to keep sample sizes reasonable and give you a little bit of confidence, I want to show you something I think is fairly compelling. There you go. 2-to-1 odds of gapping up the next day. See the 36 short trades? So this assumes you fade the open. So that would be shorting up gaps. And that has been lower than average win rate and has lost money as well. So on the surface, neutral to unattractive. However, a gap down, almost a no-brainer. 18 of 20 down gaps have filled, making an average of almost 6 points while losing 8 or 9 points. Now again, this is using an end-of-the-day stop, not something I recommend nor that I do. I'll rerun these exact numbers for our members in the morning using our MTG stop parameters, but it should be pretty clear that there's a long bias, not only in terms of overnight action, right, likely to gap up tomorrow, 2-to-1 more likely, but if we gap down, happen to gap down, very high win rate by end of the day. So it could be choppy and volatile if we gap down, but be looking for opportunities to get long would be the overriding thought I would have tonight and tomorrow. All right. All right, so let's talk about what today brought us. And let's see. Let me show you the worksheet. So the worksheet's the average of our 8 individual gap guides. Great place to start your analysis. So you look at the opening area. There's only 4 opening areas that can occur in the markets any given day. Today we opened below yesterday's lows. It's all relative to yesterday's open, high, low, and close. You see huge sample sizes when you look at all 8 markets over the past 10 years and 3 systems applied. 51% historic win rate using our volatility adjusted stops here. We use 30% of the 5-day average true range. And PF is profit factor, ratio of profits to losses, just about dead break even historically. 1 is dead break even. So absolutely no edge there. And let's see, unique day factors, down gaps, day after Fed day when below the 10 and above the 20 has only happened 3 times. So that shows you how unusual today was, and you can't read anything into it. It's only 3 trades, so I pretty much completely discount that. And then see down gaps on Thursday of options expiration week after closing below the 10-day moving average but above the 200. That's dead neutral. Down after in terms of unique patterns, down gap after a 10-day moving average down straddle. One of my core patterns I pay attention to during the same market has been slightly attractive, maybe neutral to slightly attractive. But there's nothing there that convinces me to even remotely consider buying a down gap. So my thought today was, well, maybe there's a chance of either following the gap or going for partial gap fill. And let me show you my pre-market comments. Again, I'm not showing you the gap guys today. I'm actually trying to hustle, see if I can get, I think we're likely to finish weekly today. So we have a gap gotcha setup that many of us trade into the close. I want to be ready for that. So sorry to be short on the video. My comments. Large down gaps day after Fed day, 1 of 10 wins. Today's going to make 1 of 11. That's pretty compelling because it's, even though sample size is small, it's a very specific and unique day. And down gaps DL zone that are large during similar market conditions also very weak. But if this is after you close down more than 0.75%, it's been winners. But this is why we don't trust small sample sizes like this. So this countered a lot of this bearishness, but it didn't override that, in my opinion, nor all the other data I just showed you. So bottom line, I said this is an easy pass for me. I'm always looking to fade the gap. It's my core strategy. I'll likely be looking for short opportunities using the guides after the open. Likely meaning I wanted to look at our other analysis that we have, our advanced studies on the range guides, make sure things were set up as well as I thought, and watch the price action and market internals just confirm what the historical probabilities were showing. Well, sure enough, they did confirm it. 15, so I passed on the gap, and whoops, yeah. So here's the 5-minute S&P 500. See the purple lines there? That is the 15-minute range. 15-minute range showed very strong probabilities for today. Let me show it to you so I don't have to take my word for it. I anticipated they might. And part of it, just knowing these big, large gaps in this zone, if you test the lows, you're likely to continue lower. So I actually went early on the entry, in part because of the good news on the housing numbers that came out was a fake out. If you look at this, it's hard to see, but there's a wick there. That gave me confidence that if it broke this prior low, I could get short. And I went short at 1504 and a quarter. 1504 and a quarter, and I held for the entire target, which was, well, let me show you, for 15-minute range, guys. So I got a couple extra points out of it, almost 3. So needed a 6 and a quarter, 6.5 point stop, 4 and a quarter target. So the textbook setup was to go short, and I trade these with a fair amount of discretion. The more directional guides, as they're called. So you would have gone short at 1601.50. Well, I was short from 1604.50 or 1604 quarter, about 3 extra points, which was great. And the target took you to 1657 and a quarter, because you go short 1 tick there. So basically I got 7 points on the trade. Sweet trade. Unfortunately, I had to be out of the office almost all day with the client that was in town for one-on-one training on my back testing tool called Gap Trader. We had a good time, very productive session, but I did miss. Actually, I saw the first hour of data, and I thought it was intriguing, right on the fringe, but considering I was going to be out of the office, I decided to pass. That ended up being a winner as well. First hour low breakout was favored, and you would have survived with that 6 and a quarter point stop. See, had 6 to 1597. Stop would have been up here and would have rolled over and hit it. So quite a few of our folks caught one or both of those trades, as they should have, because the data was good today. So that was my day, and that is the wrap for Thursday, June 20th. Have a good one.